So I think one of the concerns that I have about the future of RWAs are we just going to take traditional KYC, traditional ways of working in TradFi and essentially create a whitelist in crypto that's just as easily restrictive and hard for people to participate? Because one of the broader visions of crypto, right, is banking the unbanked, or more importantly, giving financial access to people who otherwise would not have access to particular vehicles, methods of growing wealth or preserving it. And so that's why I'm super excited for this next panel, which is all about how to manage tokenization. It is moderated by the chef at Steakhouse, Sonya Kim. That's a very fun title. So Sonya, please bring up your panel and have a great show. Big round of applause, everyone.
Hi, everyone. Can you hear me okay? Woo! I think we need to inject some energy in the room. It's getting late, and I think people are tired and hungry. But yeah, we'll try and make it as fun as possible, hopefully. Yeah. So yeah, this panel is a very broad topic of real-world assets, stablecoin resilience, and institutional engagement. We also have a very big cross-section of panelists from regulated centralized exchange, an L1, a regulated asset issuer, and leveraged protocol, right? Composable leverage DeFi protocol. So we're really lucky to have such a wide range of vantage points. So I'm really excited to introduce each of the panelists. If we can take it from Erin.
Great. Hey, I'm Erin Kelly. I'm a Director of Partnerships at the Stellar Development Foundation. We're Layer 1, and we're focused on kind of real-world use cases and kind of impact.
Hey everyone, thanks for staying with us this afternoon. I'm Hassan. Ahmed. I'm the Country Director of Singapore at Coinbase. Been at Coinbase about 3.5 years, moved to Singapore about 5 years ago from New York, and never looked back. Locally, we received our license from the MAS last October, so we're proud to service consumers, institutions, developers for really the whole region out of Singapore.
Hi everyone, I'm Nick Robnett. I'm the head of asset growth at Paxos. We issue a few different stable coins. We'll be launching one actually in Singapore soon. Paxos was actually founded in Singapore. Some people don't know that. Over 10 years ago is a company called itBit. We have a major payments provider license here in Singapore. We've had an office here the entire time. And so thanks for having me.
Hi everyone, my name is Ilgiz. I'm from Gearbox Protocol. Gearbox Protocol utilizes account abstraction model to build efficient and flexible lending markets. Leverage is only one of our use cases, but actually it works with any DeFi on-chain primitives.
Cool. So I want to kind of inspire the audience here. We have, as mentioned, such different diverse ecosystem players here. Could you just talk about why you're interested in tokenization and how you're viewing the eventual size of the market from each of your involvement with RWAs and tokenization products?
I guess
Yeah, Erin?
All right, I'll kick it off. So I think from the Layer 1 perspective, we really care about tokenization and real-world assets because we want to get these assets into the hands of users in the ecosystem. So we really want to pursue things that have real utility and bring value to users. Stellar does a lot of work in the Global South, and there's obviously really strong use cases for tokenized treasuries, every kind of asset that's providing a yield to users, in inflationary economies, things like that. So we're really focused on, what's going to have usage, not just kind of what's the next big hype. We're focused on why would someone actually want to hold this asset? I hate size of the market questions because it makes me feel like I'm in a consulting interview again, like in grad school.
Sorry.
I mean, I will defer that to people with a little bit more of an economics background, but I think that obviously there's a lot of room to grow, and I think that we're going to keep seeing that, especially as we move towards, institutional use cases and really kind of moving all of that money on chain. So ideally, it becomes kind of all of finance, but that's obviously a very long road ahead.
So who's got an economics background here?
I studied economics. I'm still completely unqualified to answer this question, but.
Yeah, look, I think maybe out of all the sectors in crypto, this is maybe the one where TAM isn't the issue. So, you can pick up any number you want, right? Like M1 is 18 trillion, M2 is 25 trillion, this asset is this many trillion. So I think that there's many other kind of factors that are inhibiting growth, and I'm sure that we'll get into, but as far as TAM is concerned, I think this is the one where maybe we're good. But then also just to the other part of your question of what's our source of interest. So Coinbase has a thriving institutional business along with its consumer business as well. So we have partnerships with many major institutions at this point, in addition to kind of being custodian for the ETF part. The ETF one is I think it's the other way around, where we're kind of helping to push BTC and ETH into TradFi channels, and then tokenization is sort of inbound, where we're helping many institutions, especially asset managers, that are looking to come on chain and really explore the benefits that they want to really acquire.
From DeFi perspective, I guess we are looking for different yield sources, yeah, and here is some endogenic yield source like staking, I don't know, restaking as previous hype. And tokenization, I guess, allows us to get this external yield sources and move it inside the DeFi, so that DeFi protocols can use this smart contract rails to actually enable new kind of product for end users.
Nick, do you have anything to add there?
Sure. Yeah. I'll probably, like most of us, definitely kind of like a blockchain maximalist weirdo. So I think the TAM is $700 trillion, or all of the assets eventually moving on chain over a long enough time. And so that's just, like Erin said, I think it's going to be a very long time. And I think that the interesting thing right now is just stablecoins. Like that's where the actual strongest use case seems to be for tokenized anything outside of like native digital assets. But from a tokenization perspective, that's absolutely the focus.
So I checked the TVL of stablecoins this morning. It was around 170 billion. So we've got quite a long way to go to 700 trillion. And Hassan, you mentioned there are some challenges to adoption, and specifically institutional adoption. So just want to double click on what kind of, what's the nature of these challenges, and what are institutions like Coinbase doing to alleviate those challenges?
Yeah, so there's a fairly long list of issues and concerns that I think especially regulated institutions are trying to work through. I'll just hit on a couple, and then I'm sure my other panelists can add as well. I think maybe just the first off, when you beyond sort of stable coins or just currency, when you think about tokenization, you're starting out with the sense of, look, there are going to be trust assumptions for real-world asset tokenization. So you have to start with that as a premise, especially for folks that are really kind of crypto native and may have concerns around that. But for institutions, I think starting out with, hey, what is the right way to think about security posture, compliance, even kind of back office things like financial operations, and how do we actually integrate that in? Those are fairly granular topics that are being worked through. But where I think we're starting to see green shoots is areas around permissioned access on top of permissionless protocols. So this is happening at the DEX layer, the liquidity provisioning layer, the user access layer, and so I think we're starting to see some of these ingredients come together, in a pretty healthy way, and we're starting to see pilots kind of really start to graduate. I think that the other one that comes up a lot is, okay, well, you're telling me that I can tokenize this real estate loan or this piece of art, and that's great, but we can run the tokenization engine, but where's the liquidity going to come from? And so who's going to pick up the tab for that? And then how do you split the economics amongst the parties so that there's some sort of a win-win situation for everyone. So there are like, again, ways to just incentivize pilots and even take some loss so you can get started. But I think this is one where there's probably just more work to do to get more diverse market makers on board as well.
And Erin, you must, as a director of partnership, interface a lot with institutions as well. So have you got much insights here?
Yeah, I mean, I think Hassan covered a lot of good ones. I think I'm based in the US, and obviously there is a lot of waiting involved right now for regulatory. We were a public chain. I talk with a lot of institutions who are like, we get the benefit of a public chain. We feel like our regulators are more comfortable in a private chain right now. So there's a lot of that just working through getting kind of the trust element. I think that, like you said, being able to figure out permissioned solutions for permissioned assets on public chains, things like that are really moving along and helping that conversation move forward. And I do think everyone's getting a lot more comfortable feeling like those risks that they wanted to take aren't actually as risky as they thought. I think, so we kind of cover a lot as a chain. Like we do talk a lot on the institutional side. We also do a lot of things that are more, touching retail. And I think one of the issues there is just how widespread access is. We get a lot of requests from partners of like, hey, do you have a partner in this random country that can accept USDC or that has a local stablecoin or something like that? And so there's still kind of an issue with on and off ramping and kind of making sure it's really widespread, because even if I want to do trade finance, I need it to cover all of my partners. Otherwise, it's not efficient for me to move to stable coins or some kind of on-chain version of what I already do, because my current system covers all of my bases.
I would look on this problem not only from regulation side, but from UX side actually, yeah. I guess if there is a big demand from user base, there is like high speed from regulation side, from big institutions to come into the market. But actually UX side is still like not so good actually for user who are not familiar with crypto. So onboarding in crypto, buying different complicated assets, it's quite still a very difficult task for end user. And focusing on the UX side, I guess one of the most important things what we as the industry can do, so that people, not only, I don't know, several millions who are already involved in crypto, but I don't know, billions of people who every day use smartphone will be able to join, use all these crypto rails and be involved in the market.
Yeah, that's right. From Gearbox's perspective, are you guys doing anything specific to address the UX challenges?
Yeah, actually, one of the big improvements from UX side in Gearbox, I guess, using account abstraction model to enable credit for DeFi, so that user in one click will be able to do a lot of different operations. And later it will be possible to integrate such kind of model for wallet providers, card issuers, and other players, so that everything will be from UX side smooth and seamless for the user.
And Nick, you represent Paxos, which is a regulated stablecoin issuer and tokenized assets issuer. So you must run into the regulatory conversations as well. So
I can't get out of it. It's just not even running into it. I'm just in it at this point. And I would say the reason that we do that, and I think it goes a lot to the UX point, is because I think that one of the best ways to solve the Web3 UX problem is with like large incumbent Web2 players. And so that's why like working with someone like a PayPal really matters, because when they launch a stablecoin, there's 200 million retail on-ramps that can now buy stablecoin with their debit card or an ACH or like whatever other instruments you have in your PayPal account. Or like Grab launched to support PYUSD this week, and so you can go get a Grab taxi with stablecoin. Like that kind of utility is just like very accessible to people, and so I believe that it is part of the friction is just like getting Web 2 platforms comfortable and working with and integrating crypto solutions is just really hard for them. But I also think it's a really great solution to accelerate adoption of things like stablecoins.
So yeah, stablecoins, like the first product market fit for RWAs on chain. Initially, we started out as just creating these things that are used as medium of exchange, and then rates started going up, and users got more clever, and now we have tokenized treasuries or other forms of passing on at least some portion of the yield to the holders and the users of stablecoins. So I find this new dimension of yield generation not from, say, like token emissions or inflation of last cycle, but more kind of dependable yield of stablecoins quite interesting. I was wondering like what you were seeing there from some of your users. Are consumers getting more clever, demanding of yield? Like what are some of the still outstanding challenges for being able to take the yield that we can generate from the real world and really bring it on chain?
I just launched one of these 2 months ago, and so happy to share my experience with this. I think, well, like a big first challenge is regulatory. You can't do it in the U.S., so we block this product from anyone in the United States, and that's like very limiting. I think the adoption, though, that we see in emerging markets is really exciting, and people in these markets, they look at this, and the message that resonates and how they just like immediately look at this product is that it's just a high yield savings account in US dollars. And now they can like very quickly get access to that in a way that the existing banking system and probably their local currency has just failed them. And so that is like an immediate step of just like seeing a tokenized product, it's just a stable coin, but like not thought about as crypto. Like when I look at stablecoin adoption so far, even with all of these yield-bearing products, a vast majority of it and all of the utility is still really in crypto. But I think seeing a use case like that is really interesting, and people just, like I said, they just think about it as like a savings account.
Why can't yield be passed on in the US? Like what is the blocker there?
It's the security. The Gary Gensler and the SEC are the blocker.
Yeah, maybe just to add on to that. So, yeah, I mean, I love stablecoins. I love our USDC. You can get 5.2% rewards on USDC for holding on Coinbase Singapore. But just to be very kind of straight up about it, that is a somewhat of an old school way that's done. I think with yield-bearing stablecoins, I mean, that really starts to get into the fact that all of this is programmable and composable, so you can latch on new primitives in clever ways, so that they can work more efficiently for you, and then you can get more access. So I love the experimentation that's going on around yield-bearing stablecoins. I do think that there's more regulatory clarity that will have to eventually work. But just folks like Mountain Protocol and Athena and others. I think that they're going to, really sort of break the mold of, what stablecoins 2.0 are going to represent. And I think it's great, especially for the global south, as you were saying, like for many folks who just don't have access to, bank accounts, much less USD. This is the way that they're going to be benefiting from the current kind of T-bill yield that a lot of, especially folks in the US, are benefiting from anyway.
Yeah, I think that we're seeing from the demand side a lot of from ecosystem partners and customers requests for getting more of those yield-bearing stablecoins or yield-bearing other assets on chain. I know there's kind of still a lot of gray area of how are we defining all of these things, which, yeah, I think that'll maybe get figured out over time. But I think that we're really seeing kind of a convergence of these two worlds. It is still limited by, can I only access through a provider's walled garden? Can I transfer it to someone else? What are the KYC implications, things like that. But I think we're definitely seeing more people want to use these assets as, more trusted issuers are kind of coming online with them.
For us, I guess it's important to understand what kind of risk is hidden inside different assets. because it's kind of, for lending markets, is crucial to understand like what kind of, I don't know, black swans could happen, yeah? And I guess one thing that we could improve as an industry is do a different open tools to like some standards maybe to implement such instruments. Otherwise, I guess we could end up as a banks or something like current TradFi institutions with like highly regulated and yeah, we need to trust, yeah? So either you trust to governed and governed institutional model, or you should do some automated software-related tools to be able to community to understand what kind of risk are hidden.
We talked about UX, and from a crypto participant's perspective, feels like we've created many UX challenges. You know, there's a million L1s, like even more L2s. There's lots of different stablecoins now being created. It feels like everyone and their mothers, you know, creating a stablecoin. And that goes directly against, of course, the point of money, which is liquidity and being able to, you know, transact and avoiding the coincidence of wants. So I'm curious, like, what your view is on the end game for crypto and blockchain infrastructure. If we were to move all of these assets, you know, 700 trillion of real-world assets onto some sort of blockchain, you know, related technology, like, how do you foresee all of these moving pieces connecting with each other?
Can I have a pessimistic view, so I want to go first, and then an optimist can go last. My take on these products, whether it's stablecoins or chains or whatever, especially when you're talking about payments and money, is that it's a network. And because it is ultimately a network product, there is going to be I think, pretty short list of winners, because the most powerful network, and we see this in other industries all the time, are just going to copy the features and capabilities of the interesting up-and-comers and then force them into the bigger, stronger, safer network. And on the decentralized nature of everything that we do, I think safety of the network becomes the biggest thing in the long term, and then you just can't beat the safer network if they can just copy the feature. And so I think with stablecoins, with chains, with all of it, you just end up necessarily with a really short list, because it will be like higher utility, lower cost, like greater value. And I think that over the long term, it's hard to see like some standard or some interoperability, like something that like stitches together to make it not that way to me.
So short list of L1s and short list of assets.
Yeah.
Yeah.
I'm on opposite side. As a tech geek,
Great.
yeah, I need to be opportunistic. So actually, my vision of this is kind of, yeah, there is still a lot of problems, yeah, like liquidity fragmentation, I don't know, bad UX for user. But my vision on it is that it will abstract it from user. Like currently, when you use Web 2, actually you don't know how SMTP protocol works. You just send email and that's it. Yeah, some text, you write it, push one button, and it's okay. I guess something similar will happen with Web3. So there will be some chain abstraction tool, account abstraction tools to abstract it from a user. And even for real-world asset, I guess there will be a lot of different, I don't know, financial reporting stuff, maybe related on ZK or something like that, so that it will work on different rails, not as a current TradFi markets. Yeah, and for the user, it will work like in seamless, similar to Web 2 experience.
Yeah, I would probably echo some of that. I think that from a user's perspective, it all disappears into the background. Like, you probably don't even know that it's on a blockchain, and you shouldn't. You shouldn't really care at the end of the day as a user. So I think that there will be some commoditization, obviously. Like, we're already seeing a lot of that happening with different chains. But I think that there's also opportunity for chains, projects, whatever, to provide really bespoke services that, yeah, maybe you can imitate, but then those bigger, the more centralized parties do also become a greater target. So I think that there's a little bit of give and take there. And I think that you see all of these different things kind of leveraging each other already in the RWA space. Like you have Ondo utilizing BlackRock for its reserves. You have, Mountain Protocol doing the same with Superstate. And so there's a lot of this kind of blending that happens in the background. And as a user, maybe I don't actually dig into what the reserves of this token are. I just know that I trust it, there's liquidity, and that's why I use it.
Yeah. So it feels like interop is kind of going to be helpful, at least. Are you guys at Stellar doing any sort of interop integrations or explorations to make it more usable and composable with other chains or assets?
Yeah, definitely. I mean, we don't have a one chain to rule them all kind of vision. So, for example, I mentioned institutions often want to operate in private environments as well as doing something as in public environments. We recently had a team who built a Hyperledger Besu connector to Stellar, so you can kind of go between the two. We leverage bridges. We talk with interoperable protocols all the time. So I think that's the way that we're leaning as well.
Hassan, from Coinbase's point of view, any spicy takes on this?
Yeah, I think I'm between Nick and Ilgiz on this. I think there are too many chains. There's over-indexing on infrastructure versus applications generally, which is separate from RWAs, and that's to do with perverse incentives and overfunding, and there's just this sort of reflexive action that's going on. My hope is at some point when just the marginal ROI really kind of falls off a cliff, that's going to then stop funding of just too many Me Too L1, L2s, and then I think we probably will see rapid consolidation back to whoever has sort of stronger networks. So there's that, and I do think that UX is just getting better, especially with new primitives coming on board. I think for assets, I think the USD wars feel like they're still very much in play. Stablecoins have gone from boring to buzzy this cycle, it feels, and to your point, everyone and their brothers issuing something, right? They're getting into the game. So let's see. Maybe we'll learn from our mistakes, or maybe we'll just play the same movie over again.
Yeah, I don't think my mother is going to be issuing stablecoins, but yeah, gets the point across. Let's get our creative juices flowing a little bit. Stable coins, yes, definitely a thing. What else? The other day I kind of had this weird thought that I may have a tokenized version of my house and I have it in my Coinbase wallet. But, that idea just feels really foreign. When you project out 5, 10, 20 years, when we have the infrastructure all seamless and interoperating, what other asset classes are you really excited about for tokenizing and bringing on chain so we can do fun things with it?
I mean, I think from a personal perspective, the idea of being able to do a real estate transaction more seamlessly on chain sounds great just because it's so painful, at least in the US. But that is something that requires cooperation of governments, and so that's complicated. I think as someone who talks to a lot of builders about things that they really want to tokenize, what I really like is seeing people who kind of come from that industry already, and they're like, hey, this is how we do things traditionally, and this is how I think it could be better if we bring it on chain. So, talking to people who, oh, my family has been working in the gold industry, we know how it works, and we can kind of leverage that. Maybe this is a good thing to tokenize. There's a small fund in Germany that we're working with that's tokenizing LP shares, and so it's kind of fun to have some of those other interesting smaller projects popping up that you're you can get excited about it, even if you're we'll see if this sticks. But yeah.
Yeah, so I think the other side of the fact that the TAM for this space is really huge is that the biggest investing risk in this theme is that you're always too early. If you sort of harken back to last cycle, it was 2 cycles ago when Pomp was going, we're going to tokenize the world, right? This is something that's just, a rally, a cry that's been around for a long, long time. And people have looked at every single asset class and said, hey, I should tokenize that. Art, real estate, commodities, silver, gold, blah blah blah, you name it. And again, like I think there's going to be eventually value to doing that, but I think we just have to be careful about progressing along a certain arc, and that I think it will most likely take longer than we expect. Took stablecoins about like 7 years to really take off. I think T-bills took off about 2 years ago. So I think maybe if you just track that, like private credit maybe will come up more in the next 5 years. But I think it's important to just keep our heads down and do the work, and especially things like regulations, legal contracts, policy. Those things just take time, but you just gotta push on them day after day.
The asset issuer, are you guys thinking about anything other than, you've got the PaxG, the tokenized gold.
That's been around for about 5 years, and when you look at it compared to like the entire gold market, it's like a $500 million asset versus like gold is like however 10 trillion or whatever it is. I think the next kind of like most interesting to me tokenization opportunities are in a lot of the sort of like back office kind of like financial institution type of stuff, like being able to like tokenize different securities and like not having to unwind these big collateral positions to transfer them, and just like real advantages that you can get from working with a small group of committed players versus trying to I think like the real estate one is a great example of just like how many people you need to get on board to be able to do something like that makes it hard. And so I think just like finding tokenization opportunities where you can get like the full stack with like 4 or 5 different players to actually like move a use case feels like the right way to focus and find those opportunities.
From techno-optimist view, I remember I saw a few years ago a video from Ocean Protocol, if maybe some OGs remember it, when their idea is that even forests could be tokenized. So maybe we'll see a lot of different things that will be tokenized, but we don't care about it right now. Actually, yeah, after this video, actually, like few years already, after a few years, we can see that green markets, yeah, so like European Union start talking about like, okay, some green bonds or something like that could be sold to other parties. So we'll see. Everything that we consume in different ways, I guess, could be and should be tokenized. Maybe it won't happen in 5 years, maybe won't happen in 20 years, but definitely, I guess, we'll see it in our lives.
Yeah, just one maybe other area to add that I am genuinely excited about is maybe along another axis is the rise of on-chain FX. So there's I think there's been a lot of attention on USD and USD stablecoins, but we have been waiting for non-USD stablecoins to really start coming on-chain. And I think that's the one that I would say that the time has come. So EURC is already on-chain, it's doing pretty well. I think all other kind of markets, especially kind of the top 7 currencies, there's a tremendous amount of work that's happening to start issuing. But I think the big unlock that's actually coming is on the liquidity side. So you've got Wintermute and a bunch of other market makers that are really leaning in at this point. And I think between sort of the issuers, liquidity, and then distribution platforms like ours, I think in the next 12 months, this would be the space that I would watch.
I actually would use that market if, because every time you try to, do a foreign exchange transaction or swap currencies, there's so much friction. So yeah, really excited about that use case.
Yeah, we launched a EURC USDC pool on Aerodrome, and then the slippage on that was working out better than most fintech apps in EU. So I think we have some promising proof points to look forward to as well.
Do you think regulators and banks would allow that?
So the MiCA regulations are, pretty strict around stablecoins, but there are like firms that are, pursuing local licenses in order to do that. Even in Singapore, Paxos has the stablecoin license that was sort of recently issued. So you are seeing fit-for-purpose licensing regimes on top of crypto licenses, and that's a good thing, right? There's one in Bermuda, there's one in Japan. So I think the regulators also see that stablecoins really have jumped the shark, and that's really the the enabler for a bunch of payments use cases that they are also interested in. So it's a good ecosystem coordination around this.
I think we have very limited time left, but because this is called Institutional Engagement Panel, I feel compelled to ask, to what extent are institutions coming?
I mean, I feel like I've heard at conferences for the past 2 years that like
Me too,
we're
yes.
done with POCs and like, but I still have institutions that we're working with that are doing POCs. So I think that you do see, like touching on Mika, you have institutions in Europe who are actually moving and issuing stable coins and doing things because they can and they have clarity, and other institutions that are still waiting. So
Yeah, I think that sort of the institutions really have started moving forward quite progressively on this. Like even if you just look at this, broadly like Coinbase's financials, our institutional growth year over year has been much brighter than our retail growth year over year. So I think a lot of institutions onboarded with us the last cycle, and then they were just sort of waiting. But because they're patient capital and because they have a much longer and durable view on the space, I do see more institutions actually coming on. So, some examples are like, I think SocGen did one recently with Forge, like $100 million bond issuance. There's a really big fund called Janus Henderson, which is like $360 billion. They did a deal with Centrifuge for LTF, their LTF holdings, and start to kind of bring those on chain. So we are seeing some of the bigger kind of tier one asset managers that are just very traditional, that have been kind of studying the space for a while, starting to see these pieces come together, and they're making moves. And I think the rest of the industry is watching and learning from it.
The only thing that I would add, I mean, I agree with all that. I think that they're coming. I think it's just it's hard for a lot of them, and it just makes it take a lot of time. There's this like conversation that I constantly remind myself of having with a firm who had never done anything in crypto before, and then I basically spent a month on calls with like their accounting and controls people, trying to get them comfortable with the fact that they would be handling an asset out to 16 decimal places, and they were just like, but it should only have 2 decimal places, right? And it was just like systems had to be rewritten, like processes had to change. It's just like, it just takes a long time for these companies that are already like well established and operating in a completely different world to make a huge transition over. But I think that I mean, a lot of us are probably here because we're associated with projects where we see these companies like moving in on this stuff. It just takes a lot of work and a lot of willpower.
I think to simplify choice of institutionals to come into the market, we need to focus to build better products, attract more people into crypto, and they definitely will come.
Yeah, I'm still trying to process the 16 versus 2 decimal places and the consequences of outdated tech. But yeah, well, thank you so much, guys. Can we give the panel a round of applause? And
Thank you very much, Sonya, for making that panel very, very fun, especially towards the end of the day. 고생 많으셨어요. Okay.